From an investment perspective, identifying companies that not only dominate their sector, but fundamentally reshape it is the holy grail of long-term value creation. Today, we turn our analytical lens to UnitedHealth Group Incorporated, ticker symbol UNH, a titan of the American healthcare landscape. While many view it simply as a health insurance provider, a deeper dive reveals a far more complex and strategically sophisticated entity. This is not just a story of a company's growth. It is a case study in strategic evolution, vertical integration, and the relentless pursuit of market leadership. Headquartered in Minnetonka, Minnesota, UnitedHealth Group has meticulously engineered its ascent to become the world's largest healthcare company by revenue. A position achieved not by chance, but through a series of deliberate, calculated maneuvers that have transformed it from a simple insurer into a diversified healthcare conglomerate. To truly grasp the investment thesis behind UNH, we must dissect its journey, analyzing the key strategic decisions that have propelled its valuation and cemented its indispensable role within the U.S. healthcare system, providing a vast array of solutions for individuals, corporate clients, and government bodies. The genesis of this corporate behemoth can be traced back to 1977, with the founding of a modest company named United Health Plans by Richard T. Burke. From a strategic standpoint, the initial business model was straightforward yet perfectly timed. It entered the market with a clear and focused objective: to provide health insurance products and services directly to consumers and businesses. In the late 1970s, the American healthcare system was beginning a period of significant structural change, moving away from traditional fee-for-service models towards managed care. United Health Plans was positioned to capitalize on this secular trend. Its initial goal was not to revolutionize healthcare overnight, but to establish a solid operational footprint in the burgeoning managed care market. This foundational phase was critical. It was about building a core competency in risk management and insurance administration, which would serve as the bedrock for all future expansion. By concentrating on the fundamentals of the health insurance business, the company developed the expertise and capital base necessary to fuel its subsequent, more ambitious growth phases. This initial focus on a single, high-demand service allowed the firm to gain critical market share and brand recognition, setting the stage for the aggressive expansion that would soon follow. The period spanning the 1980s and 1990s marked a pivotal era of strategic expansion and corporate maturation for the company. A significant early move occurred when the company rebranded as United Healthcare Corporation and executed a successful initial public offering IPO. This transition from a private entity to a publicly traded company was a masterstroke, injecting the organization with the substantial capital required to fund an aggressive growth agenda. This wasn't merely about organic growth. The leadership adopted a highly acquisitive strategy, understanding that market consolidation was the fastest path to scale and competitive dominance. United Healthcare embarked on a series of strategic acquisitions, methodically purchasing a diverse portfolio of assets that included rival health insurance companies, various healthcare providers, and emerging medical technology firms. This M&A activity was not random. Each acquisition was designed to either expand the company's geographic footprint or broaden its service capabilities, creating a more robust and integrated offering. Concurrently, a core pillar of its strategy was the aggressive construction of an expansive and powerful provider network. The company dedicated immense resources to contracting with hospitals, physician groups, and a wide array of medical professionals across the country. This network building was a crucial competitive differentiator. A larger, more comprehensive network made its insurance plans more attractive to employers and individuals, creating a virtuous cycle where network size drove member growth, and member growth, in turn, provided greater leverage in negotiating favorable rates with providers. This two-pronged approach of acquisition and network development allowed United Healthcare to rapidly scale its operations, entrenching its position as a formidable player in the national health insurance market. The dawn of the 21st century heralded the most transformative phase in the company's history, a period defined by a visionary shift towards what it termed comprehensive healthcare. This strategic pivot was formally signaled in 2005 when the company officially rebranded as UnitedHealth Group Incorporated. This was far more than a cosmetic change. It was a public declaration of its evolved identity and broadened ambition, reflecting that its operations now extended far beyond the confines of traditional health insurance. The true paradigm shift, however, came in 2011 with the formal establishment of Optum. This move was a stroke of strategic genius, creating a distinct business segment dedicated to providing high-margin healthcare services, advanced technology, and data analytics to the entire healthcare ecosystem, including its own competitors. Optum was meticulously structured into synergistic divisions. Optum Health focused on direct patient care delivery through clinics and care networks. Optum Health's a formidable pharmacy benefit manager (PBM) tackling the complexities of pharmaceutical costs. And Optum Insight, a technology and data analytics powerhouse offering consulting and operational solutions. The creation of this integrated model, combining the massive insurance chassis of UnitedHealthcare with the high-growth, high-tech services of Optum, was a game-changer. It allowed UnitedHealth Group to create a closed-loop system, generating unparalleled data insights from its insurance members. It could then be used by Optum to optimize care delivery, manage costs, and develop new technologies. This symbiotic relationship between the insurance and services arms created a powerful competitive moat, enabling the company to offer end-to-end solutions that spanned the entire healthcare value chain. From underwriting risk to managing chronic disease and processing pharmaceutical claims, this wasn't just diversification. It was the creation of a deeply integrated, data-driven healthcare platform. Entering the 2010s and continuing to the present day, UnitedHealth Group has solidified its position as the undisputed leader of the global healthcare industry, status built upon the successful execution of its integrated strategy. The company's scope of operations is now immense and multifaceted. The United Healthcare division continues to be a dominant force in insurance, offering a diversified portfolio of plans tailored to distinct market segments. This includes commercial plans for employers, Medicare and retirement plans for the rapidly growing senior population, community and state plans serving Medicaid and other low-income beneficiaries, and its global division catering to international markets. This broad market exposure provides stable, predictable revenue streams and a massive base of covered lives. Simultaneously, Optum has evolved into the primary engine of growth and profitability for the entire enterprise. It relentlessly expands its suite of services in technology, data analytics, care management, and pharmacy services, becoming an indispensable partner for hospitals, physician groups, and even other insurers. Optum's ability to sell its services to the wider market, including UnitedHealthcare's direct competitors, is a testament to its best-in-class capabilities and a brilliant strategic maneuver that allows UNH to profit from the entire industry's growth. Central to this dominance is a profound commitment to technological innovation. UnitedHealth Group makes substantial investments in cutting-edge technologies, particularly artificial intelligence, AI, and big data analytics. These tools are leveraged across the organization to enhance operational efficiency, personalize patient treatment protocols, identify at-risk populations, and predict public health trends, giving it a significant analytical edge. Furthermore, the company has astutely identified the secular shift towards value-based care and patient convenience, demonstrating a keen strategic focus on expanding its capabilities in home health care and telehealth services, positioning itself for the next wave of disruption in care delivery. In conclusion, the trajectory of UnitedHealth Group is a compelling narrative for any serious investor analyzing market structure and corporate strategy. This is not simply a large insurance company. It is a meticulously constructed, vertically integrated healthcare ecosystem. By leveraging the immense scale and data-generating power of its United Healthcare insurance arm to fuel the high-growth, high-margin services of its Optum segment, UNH has created a powerful, self-reinforcing business model that is difficult to replicate. The company's strategic foresight in building a dual-engine platform, one focused on risk management, and the other on technology-enabled services, has allowed it to capture value at nearly every point in the healthcare transaction.
Oh.
It has effectively transformed itself from a payer of claims into an influential manager of health outcomes and costs. For investors, the thesis rests on this unique integration, which provides defensive characteristics through its insurance base while offering significant growth potential through Optum's innovation and expansion. UnitedHealth Group is a prime example of a company that has not just adapted to the complexities of its industry, but has actively shaped its future, using technology, data, and strategic acquisitions to build an enduring competitive advantage and redefine what it means to be a healthcare leader in the 21st century.